Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Friends, in this video, I am going to talk in the topic, are investors too cautious? As the markets hit new high, there is something peculiar that I have been noticing. We run strategies in our PMS where when we find an idea, we ask the investor to contribute some incremental money. Assume that your existing portfolio is 100, this incremental money could be in the region of 5 or 10% in that zone. Assume that your existing portfolio is 100, this incremental money could be anywhere between 5 and 10%. Why do we need that? To create a new position, a new stock in your portfolio. So it will be a starter position. But what we noticed in recent weeks is that investors are correlating the Nifty highs with this decision. Now, buying a particular individual stock is an independent decision made on the merit of that stock, the suitability of the valuation, and the opportunity which that stock can create for the portfolio. But investors are layering their judgments on the Nifty and then making their decision whether they should put in this incremental money or not. It's like taking a top-down judgment of the market and then layering it on a bottom-up decision that you need to make. Sadly, quite a few investors, and I notice this trend more and more, are shying away from making up their mind. So the decision almost gets shelved and they fail to participate in that individual investment idea. Now, this is not new to me. It has happened quite a few times in the past. But what I really feel concerned about is that by not participating in all the ideas, sometimes you may miss out on very, very critical opportunities for your portfolio. So the others would have it, while the person who layers his judgment with top-down investment rationale in a bottom-up stock investment decision tends to get left out. And that is something I feel would be very sad, because as a bottom-up investor for most of my life, I believe that one should evaluate individual opportunities on their independent merits and then make your investment decisions. If you have the liquidity, you should invest in that idea. I don't think you should worry about where the Nifty is or where some other index is, because you are not investing in that index. Your individual investment decision is not going to mirror the performance of that index. It is going to perform according to that company's prospects, according to the correctness of the valuation at which you are buying, and according to the size of the position that you are creating in that individual idea. But we have to live with the reality, and investors actually feel that they are making an informed decision and a very cautious decision. But my sense is that they could end up missing out participating in several investment ideas which could come even in the current market context. So this is something that investors need to have a fresh relook, understand the difference between their own top-down judgments and the kind of bottom-up investment opportunities that we are trying to pursue on their behalf. So as a portfolio manager, I feel that one should not miss out on an individual stock opportunity. One should participate in every single opportunity that your manager curates for you, and you should keep your macro judgments at the back of your mind and not allow it to be on top of your mind, stopping your mind from going through with important investment actions. So that in essence is what I see a lot in the current market context. The markets could stay at the same place or go up or come down, we don't know. But all the way, we need to focus on individual investment decisions, on the merit of following those decisions closely and turning those decisions into actions. And we should ensure that we don't miss out on all the action in new investment ideas. As an investor, this has been my primary motive whenever I looked at opportunities, and I never let myself get distracted by where the Nifty is or where the Bank Nifty is or where some other index is. But my focus was very, very fixated on individual ideas, the valuation that I would like to own them, and what kind of position I would like to build in them. And that focus always helped me to ensure that I participated in every single decision that I made and to create the position that could make a meaningful contribution to my portfolio returns. Thank you for watching this video.